Hello, are you ready for me to reveal this week's first trade signal? I'm ready to share it. Let's get straight to it. RTX. This is a defense stock, in case you didn't know. But the idea is any price you can get tomorrow below 214.17 is good. Good to go. From whatever price you get in, then set a $7.66 stop and a $6.94 target. That's the setup. Let me show it to you on a screen. Here's what it looks like. This is really an interesting setup to my mind because Edgefinder came back to me with this trade recommendation, and I liked it because I think, okay, yeah, right now defense stocks, but there's this huge bearish engulfing bar right after a gap. It's a really interesting setup, but here's what I like about it. Edgefinder puts out these ideas with limit orders. So it gives a price, but it says this is a limit. Anything lower than this is good, and the relative amount to use for your stop and target still applies. So as an example, if I were to get in this trade tomorrow and it opened, let's say clear down here at 205, my stop wouldn't be up here at 206, obviously, right? I get in at 205, and if I sort of shift this whole window lower, the pink and green areas, if I shift them lower to a starting point of 205, then $6.94 higher, just under 212, that's where my profit target would be. It wouldn't even have to get back up to as high as it was today or yesterday. So it just has to rebound kind of normal, and that's the profit target. Meanwhile, the tolerance, the price tolerance we're going to give it, $7.66. If we bought this thing at 205, $7 lower is 198. That's clear down here, well below the gap, and also where the candle came up before the big news of the weekend. So I think that's a really nice setup because it uses all of this enthusiasm for the stock that is built in as support. And $7.66 ought to be enough room for that, giving us a nice $6.94 profit opportunity. That's the setup. This thing has, by randomness, you'd look at this and call it about a 54% chance or probability of winning. But Edgefinder has like a 7% edge on this. So there's a 60% probability of winning this trade. This is the kind of trade that's got that little extra bit to it that, you don't know that it's going to win. But if you make these trades over and over again, over time, you have a trading edge that you can make profit from. If I go on to the next slide, I'm going to look here and talk about the ones I gave out last time I was here. I gave out two recommendations, one to buy the euro and take a 29 pip win if you get it. I got it. That worked. That trade worked. But I want to focus on this other one, Jack in the Box fast food stores. See, you might like the food, I actually like their tacos, don't tell anybody. But the food store, Jack in the Box, is kind of opening new locations. So they've been having some success, and, maybe that's going to translate into something, right? Well, Edgefinder doesn't, it's not about, here's a stock recommendation, buy this stock because it's going to go to the moon. No. Edgefinder says, if you buy this stock and you try to get 43 cents out of it while giving yourself a $1.28 tolerance, you're going to have a better than random chance of winning this trade. You're going to have an edge, somewhere 6, 7, 8%. And, I gave that trade out last week, and this is so interesting. It worked. The trade won, but how it won is so interesting that it is relevant to today's pick at RTX. So look at this. Here's what the chart looked like when I gave out the pick on 224, right? First off, the price closed way up here, well above 17, and Edgefinder said, buy this thing at 1680. That's what you got to do. Buy it at 1680 and sell it at 43 cents higher. 1670. Sell it at 43 cents higher at 1713. So, I mean, this is just barely getting back to the middle of this candle. And who knows it's going to dip. Maybe this thing's going to take off and run, right? Look what happened the very next day. See, the next day, it opened lower. It opened below 17. But it went down. It went right down, dipped into that 1670 price point where we had our limit order waiting for it. And then it went up, fluctuating throughout the day, and it hit the profit target at 1713. Good thing. This trade only lasted a few hours, right? You got in, got out the same day. Buy it here, sell it up there, and good thing because this thing dropped straight down to the stop loss. So unfortunately, if you thought this was get in here and buy and hold, then you didn't have a good time with this. This is buy 1670, exit at 1713. This thing lets you do that. It is not a buy and hold trade signal, okay? That's just keep it in your mind. All of these trades. The same thing with RTX. The RTX might take off. I mean, conditions are right for a defense stock, right? But that's not what we're talking about. We're talking about buy this thing, and if it goes that high, take the profit, move on to the next. Why would we be interested in just buying and selling these little trades? Because we have an edge when we do so. That's why. These trades are researched so that historically they've shown an edge, and even out of the past 2 years, out of sample, we've noticed that edge persists. So the hope is that they continue to persist. That's why we give out the trade signals the way we do. So I just want you to make sure you understand that. Just like Jack had this fantastic trade and setup, I mean, who knew? 1720. Well, the machine learning, the deep machine learning that is behind the Edgefinder algorithms came up with that idea. Said, buy it down here and sell it there. Wow, what an incredible call, right? Okay, now meanwhile, let me tell you about what I've been doing. I'm getting ready to do this again tomorrow. This is going to be our second time of it. Did it last week on Wednesday. I've been keeping track. I'm looking very closely at SPY, IWM, and QQQ, in addition to Mag 7 stocks that are now offering options which expire every Monday, Wednesday, and Friday. They're getting ready to go every day, just like the ETFs. But I believe that this is the market's big gamble. More specifically, the option market makers' big gamble. I call it Gamma Experiment 2026. We might look back on this period of time and say, that was a real opportunity for those who jumped in. Let me tell you what I'm talking about. If you don't know options trading, this might sound like Greek to you. It is. That is to say, there's this stuff called the option Greeks. These are variables with Greek letter names that represent certain characteristics of option prices. All right. Gamma is one of these. Gamma is a measure of option price changes. It's kind of like the acceleration. So options worth this, but if it moves, it's going to accelerate its increase in price. That's kind of what Gamma is trying to measure. Now, here's the thing. All of that stuff is background. Here's what you really need to know. If an option has a higher Gamma, it means that there will be a more rapid change to its price. Okay? That's all that means. Now, there are three particular conditions that really give the highest available gamma. Condition number one is that you're closer to expiration. The closer you get to expiration day, the higher it is, the higher the gamma is. And the highest gamma happens, of course, on the last day of expiration. In other words, 0 days left to expire, 0 DTE options. That's what we're talking about. The options that expire today, you trade today because they have higher gamma. And if the stock price moves a little, they might move a lot. That's the idea. The second thing is, if the option strike price that you're choosing is closer to the stock price, what they call at the money, or maybe just barely out of the money, that is higher gamma. You go too far out of the money, you go too far in the money, those are lower gammas. The stuff that's right at the money or just barely out, that has the highest gamma. So that's the second condition. The third condition is within the day, the higher gamma happens towards the end of the day, not at the very end. Weirdly, it doesn't go running way up, 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 and up till the very end. It goes up and up, and the highest gamma readings are in those last 2 hours of the market. That last half hour, it sort of tails off a bit. So the opportunity is really to be trading in the last 2 hours before that option expires. That's what we're looking for, right? Because that has the highest gamma. Those are the three conditions that we're looking for. If you have a 0 DTE option, if you are using at the money strikes, and if you're trading in the last 2 hours of the day, it creates extreme opportunity. And if, by the way, you could trade in such a way that you've had a bit of an edge where you could win just a little bit more often than randomness might suggest, well, you could probably make some money. At least that's my hypothesis. And that's why I'm doing the gamma experiment. I'm showing people, here are the trades I'm trading. Here's the stuff I'm watching. And let's just see how it comes out, right? Here's an example. Back on February 18th, I was watching this stock, Google. This is the Class C shares, GOOGL, Alphabet. Okay, I got it. But whatever, you know what I'm talking about. On this day, on this day, the price of Google didn't change very much. If you look at from the bottom to the top, it's a little bit more than 1%. This stock trades with a bigger range usually. So this is a smaller range for the day. We're going to focus right on the very end of this chart, the last 6 candles or so, from 1330 to 1400 by the timing on this chart. That's actually Mountain Time Zone where I am here, Salt Lake City. But what you're looking at is Eastern Time, 3:30 to 4 o'clock, right? Well, Google goes from 301.50, as you can see on this chart, up to about 304 and then pulls back to 303.5. So in that range, you've got about a $2 movement, just a little more than 0.5%. And if you look at the 305 call that expires on March 20th, somewhere like 45 days or more out, it's kind of the typical type of option that people like to buy for this. Well, what happened is, even though Google made only 0.5% change, the option in that same move made a 10% price change. Went from 950 to 1050. Hey, that's kind of cool. We could get a 10% increase if we somehow knew to buy at the bottom and sell at the top of that little move right there, right? Okay, just stick with me on this. I know that's kind of fanciful to be able to buy the exact bottom and buy and sell the perfect top. I'm not suggesting you have to do that. For now, just pay attention to the difference in price dynamic. The stock moves 0.5%, but the 0 DTE option, sorry, not the 0 DTE option, just an option moves 10%. We're going to compare this to the 0 DTE because you're going to see how much difference gamma makes. Check this out. If we use the 302.5, not the 305, we're going, right exactly at the money from where we start. And if we use the one that expires on this same day, February 18th, this is the 0 DTE option. Look what happened here. While Google made that 0.5% change, this thing made a 1,200% change. What I'm talking about is it went from 5 cents to 70 cents. Probably more than 1,200%. In fact, if you were to somehow pick it off perfectly at the high, you'd be up there at about $1.50 or so. Some crazy high number there. 2,000-3,000% or whatever it is. So the point is that gamma on a very low priced option, very late in the day, has this incredible range. And most people think, I couldn't get that. How would I know? Just because I buy it, it goes down. Well, even if you don't know, if you just bought it for, well, as you can see here, the low was 5 cents. Let's suppose you can't get 5 cents. Let's suppose you could only get 10 cents. That's $10. $10 for one contract. 10 of those contracts is $100, right? That's all you can risk. You put that much money into the trade and you cannot lose any more than that amount. But if you win it, right, it can be much, much greater. You could win $1,000 or more from this kind of a trade. Now, I know that might seem fanciful as well, but, well, I actually made a trade that day that got that price at 7 cents, and I sold it at 63 cents. Yes, I did. I have the receipts. Now, to be fair, I also bought it earlier at 60 cents. And when that one came back around and sold at 63, that was a little bit more than break even. But between the two, I averaged out and doubled my money on that particular day. And so part of my experiment is, how can I get better and better at this? Well, let me show you. This is true for both calls and puts. You don't just have to buy the upside, but you can also play the downside. And this gives me an opportunity to demonstrate to you another trade situation that I was involved in. How about this one? If you look at IWM early in the day, remember condition number 3 was early in the day versus later in the day on the day of expiration, right? Look at what IWM did on this particular day that I'm sharing with you here. What we have is a move down early in the trading session, first hour right out of the gate. IWM dropped from 262.5 to about 261. So it's $1.50 move. And the options, the 0 DTE options that are at the money, this is a put option. So when it goes down, the put option goes up in value. That's why these, two charts are kind of like a mirror image of each other, right? So this one here, price dropped $1.50, but the option went up 150%. Not bad, right? Then look at the next one. Just about an hour later, we get another move down that drops $1.30, and the option moves up and makes 110% gain. There's a little bit of squishiness there because of that long wick there, that long shadow on that candle. You don't know for sure where you'd really have gotten out, but it's not terribly important for this demonstration. Notice that it's $1.50 move and $1.30 move, and they both moved 100, triple digit gain. But later on in the day, that same kind of move, in fact, it doesn't even move quite as far. It moves $1.20 down, and you can get a 230% move on that same one. Now, you'd have to be pretty quick on the draw to, know somehow that was the perfect place to get out. But my point here is, same kind of move, even a little milder, turns into double the impact. Double the impact. The risk is the same. In fact, the risk is actually less because an option that you buy later in the day is cheaper than the option that you buy earlier in the day. And that sort of accounts for the larger return that you end up getting. And so this is really a fascinating dynamic, because I've been able to play this same kind of thing. This past week, I have made 7 trades, 7 live trades. The Gamma experiment happens on Wednesdays at 2 p.m. Eastern time, 2 hours before the market. Now, you might not see me put a trade in and then turn around and take profit on it. You might not see that. But what I will do is I'll show you the setups I'm looking at and likely to take, and that I'm going to choose from. And if in fact one happens during the period of time that I'm there trading, great. You'll see me get to put it on. I will I'll make you aware of that. I'll let you know, okay, here's what I'm looking for. See whether or not it goes up to my target. Then I just take the profit, or maybe kind of move my stop, let it run a little longer if I think I can. Or if I just say, yeah, I'm going to let it go to the end of the day and just take a 0 on the trade, make it a full loss. Or if I think I know it's going to go make a 0, I'm going to just grab whatever's left and not take a full loss. So those are my kinds of things that I'm trying to do there. You will see me contemplating where my entry should be. Today I didn't get an entry. I was watching IWM, SPY, and QQQ because none of the Mag 7 stocks have expirations today. So I'm just looking at those 3, and they came really close, but they didn't hit my order line that where I would have put my limit orders. They didn't hit it. Instead, they turned around and went back up. Coulda, woulda, shoulda. If it had hit that line, it would have been a fantastic trade. But I really like the idea trading this way. I'm only going to be trading where there's a statistical edge, and there just wasn't one today. This is kind of my inspiration for all this is Don Johnson, not the Miami Vice guy. Don Johnson is the professional gambler who went to Atlantic City casinos and really took them for a ride. There were situations where the casinos in Atlantic City were kind of desperate to get revenue. They couldn't get enough customers in, spending enough money to make sure that they were going to be making profits. So they thought up ways that they could kind of attract more people. See, I think his story has a real analogy to the options market. I'm not sure why the option market is so desperate to get more people to trade 0 DTE options. 60% of all the options out there that are traded are 0 DTE. I think what's happening is just that's what the market's demanding, so that's what they're responding to. In that way, it's a little different. However, the point is there's a lot of people competing for your business, and they will offer very favorable prices, very favorable terms. You may not know it, but if you study it close, well, that's kind of what Don Johnson did. He was, like I say, a professional gambler and a professional consultant to gambling companies. He knew how to calculate what his edge was in the game of blackjack. And he had heard that these casinos were saying, you know what, we'll give you a deal. And in fact, if you go to YouTube and you just search on Don Johnson Casino, this is the stuff that comes up. The man who stole $15 million from casinos legally. He didn't steal anything. The man who tricked the casinos into letting him win, he didn't trick them. They just didn't do as good a math as he did. They said, we'll give you a 20% loss rebate. We'll give you a few other things. And so he negotiated with it. He went, he sat down with them, and he says, hey, can I get these rules so that, I know your dealer normally hits a soft 17. Can you, for me, just not hit that soft 17? Well, they know how much edge that is, and they look at it and it's like, yeah, sure, that should be fine. And then he adds all these other little kind of rules that they don't really keep close track of, and they're thinking, man, we just need to get a big whale in here. We need to get a $1 million high roller. We need to get them in the door. That can boost our revenues for the quarter really quick. And so they just said, yeah, sure, yes, sure. And he added tiny little incremental bits until finally his edge was higher than the house's. And he knew if I carefully play, if I just follow the basic strategy, little by little, then I'll come out ahead. And he did. He won $15 million, $5 million or so from each of the casinos, the 3 casinos he was playing in Atlantic City, over the course of about 3 months. And during that period of time, when that time was done, he had that contract in writing. Yeah, I'm allowed to play this way. So they couldn't stop him. But as soon as he was done, as soon as that contract was over, banned for life. He knew that would happen. So he wanted to make sure he made a big haul, like, lifetime money, right? Well, 15 million, that's probably enough, depending on the size of the yacht he bought, whatever. He was set. He didn't need to go in and gamble from those places in order to make a living. He made it all at once. Well, wouldn't it be fun if you had that same ability in this gamma experiment that the markets are doing? See, I think that they don't know how much of an edge they're giving away with these high gamma options in the last 2 hours. Maybe they have a way of stabilizing the price, but if they did, then when you tried to trade them, nothing would move, right? Here is a record of the trades that I put on just since last week, since I was sharing with you. These are live, real money trades I put on. Yes, I have the receipts. Here's how they came out. 7 trades have happened just in the past week, and I am up net 5% in the first week. You think 5%, whatever, that's nothing. Yeah? Think about this. 1 week. 1 week. We'll see. Maybe next week I'm going to give it all back this coming week. It is an experiment after all. But I'm using my own money, live money. I've got this one account here that I'm going to try and trade with that we'll just see how it goes. And I'll report back to you each week how this is going. Well, first one right out of the gate has been awesome. I didn't expect to do this well in the first week. But you'll notice if you look closely at the numbers, there were 4 wins and 3 losses. So, I'm close to 50%, right? But there was one on here that was giant. I managed to buy this option at 33 cents. And not kidding, 15 minutes later, it was worth $2.31 per contract. 7 contracts, up $1,300. I look down for a minute, I look up, and there's that much money sitting around, and I take it because the stock went right to my target. That's where the target said, take the profit. Interesting thing, too, is that had I kept going, I would have given a fair amount of that back. So the target really helped me. Where do I get those targets from? Edgefinder, of course. And it's fun because I'm taking these Edgefinder numbers and this high gamma, putting them together, and what do we got? Possibly a really good opportunity. I'm using Don Johnson as my inspiration. Just got to play basic strategy. Don't get crazy. Don't risk too much. And just keep going where I know the edge is. So if you want to see that happen, then you want to show up tomorrow. I'm going to be live on Quasar Market Stream, 2 p.m. Eastern Time. You can always get in contact with me through X or LinkedIn or even TradingView. My handle's the same on all 3 platforms, Gordon Scott CMT. And I hope to see you there. It should be a great time. Keep an eye out on how this experiment goes. Going to do it for a few weeks here and see whether or not the average retail trader has the opportunity to get an edge on the market makers. I think it's there. I think it's real, and especially if you have some good algorithms like you can get from Edgefinder. If you're interested, you should check out myedgefinder.com, learn a little bit more about it. Until next time, everybody, take care and trade well.